If you live in Canada, this was the biggest news of the week.
They provided $0 to deal with the ongoing genocide of MMIW G2S LGBTQIA+. This is abhorrent.
If you actually believe mainstream media, the biggest news of the week for you is that the New York Times just discovered who the real Satoshi Nakamoto is. And they released their hit piece with a lower resolution photo than your uncle's Facebook post that he took with his Galaxy S9 at the barbecue last weekend. If you believe mainstream media, you might have even got sucked even further into the quantum computing BPS. You might have watched a TBPN podcast and thought that all of Satoshi's coins were in a single wallet. And with all that, you missed the two biggest stories of the week. Is the Clarity Act about to be passed, unleashing trillions of dollars into the Bitcoin space? Did you miss the $10 trillion asset manager launching a Bitcoin ETF that performed in the top 1% of all ETFs of all time? Well, if you missed that, we got you covered. This is Dante Cook with Bitcoin Simply. Let's go. I do apologize to the MMIW G2 LGBTQIA+ community if I offended you with that opener. You should probably consider Kirk Cousins' agent. You didn't get paid, but Kirk Cousins just signed a 5-year, $172 million contract at 37 years old. In fact, all 11 of his contracts in the NFL have been fully guaranteed. He's made about $400 million. So I think the problem is that you have bad representation in Canada.
Apologize for standing up for an LGBTQ2+ kids' rights.
In other news, the real big story, Adam Back being Satoshi Nakamoto. We've already been down this rabbit hole, but apparently the New York Times is just discovering that Satoshi Nakamoto was British. He had a cypherpunk background, he had an understanding of reusable proof of work, and he had a programming background in C++. I'll save you the trouble if you didn't read the article. But actually, no, the biggest story of the week was the $10 trillion asset manager launching a Bitcoin ETF, Morgan Stanley, MSBT. And this was their biggest launch in history of their ETFs.
In terms of where the market is. But I have to tell you, in terms of the pickup we saw yesterday, the first day of trading, our best first day of trading for any of our ETFs since we've started the ETF product line a couple years ago. So I think that speaks to the demand that's still out there for the Bitcoin ETF. Almost 1.7 million shares traded yesterday, and at 12 o'clock today, we are already having another good day today. As you said, it's a nice week in the market, a nice day in the market for some pickup in Bitcoin and the markets to help us out there.
And there's a nice.
They did over $50 million in their first day, which means they're projected to buy about $40 to $50 billion worth of Bitcoin. And not only that, they have started a fee war. If you do the same thing as everybody else, well, people are just going to go with the product that has the lowest fees. And they have the lowest fee at 0.14% right now. They also have an advisor network of 16,000 and manage over 10 million accounts for Americans. This is just the first domino to fall. They're the first major U.S. bank to launch a Bitcoin ETF, and they won't be the last, especially with Scott Bessent, the U.S. Treasury of Secretary, saying that the time to act to pass the Clarity Act is now. Scott Bessent just wrote an article that was published in the Wall Street Journal highlighting that Congress has no time to waste. And it's likely because they need to raise more funds, probably to fund a war. Probably because foreign entities buying U.S. treasuries is going down. Probably because he needs a new debt buyer through stablecoins. Probably because they're about to announce Kevin Warsh to be the new Fed chair. Did you miss that?
A banking committee is set to hold a nomination hearing on April 16th for Kevin Warsh to be the next Federal Reserve chair. Life goes on.
The first Bitcoin Fed chair starts in just a few months. That's bullish for markets. That's bullish for stablecoins. That's bullish for Bitcoin. And that's why you don't sell your Bitcoin. Because you never know when that run-up is going to be. You never sell the best asset for an underperforming asset that's going to go down over time. In fact, since 2008, the dollar's lost 38% of its value. The money supply has also tripled in that same time frame, which is why smart people don't sell their Bitcoin. They borrow against it using a product like Ledn. Ledn allows you to unlock liquidity in your Bitcoin or borrow against it with no capital gains, with no taxes needed to be paid. You can repay this loan at any time, and rates are between 9.99 and 11.49%. That's about half of what you could get for a credit card. Repay at any time, get fiat in your account in less than 2 hours, and the application takes just 2 minutes. I'm a believer in the product because I don't sell my best assets. Go to learn.ledn.io/simply to get started. And One of the ways you can continue to grow in your Bitcoin journey is by getting an expert, someone who can teach you how to do all of this privately, safely, securely. And that's what the Bitcoin Way is for. Members of their team will walk you and your family step by step through all of the processes that you need to have your own private keys so that you can't be rug pulled and you can't be blocked out by the banking system. Go to thebitcoinway.com/partner/Dante-Cook to get started, so you can learn about multi-sig and you can learn about not having your Bitcoin vulnerable to all sorts of attacks. Let's go back to the Satoshi FUD for a second. I don't understand why the New York Times thought that they discovered something new, something novel, something that we haven't already seen or thought about, given that all of these documents have been poured over since 2011. Nothing new was uncovered here.
Some people think that you're Satoshi. I'm going to assume that you're going to say no.
That's correct.
So who do you think it is?
I don't know. I mean, I think people have a kind of rough idea of what the skill sets are needed, like about cryptography, some understanding about monetary economics. And you can see some of the things Satoshi's writing about, right? So he's got the Genesis quote and all this kind of thing. But, there are a lot of clever people in the world. So, I know some people who were implementing, encryption and privacy tech and digital signature things and previous electronic cash systems. But, I think probably, whoever it was, they kept it to themselves. So we're probably never going to know who it was, just because, so many people have been fascinated by this, the concept of this mysterious career that they've looked through any kind of digital data they can find. And, so much time has passed now and nothing's been found, and he hasn't been active since, I don't know, when he stepped away, like 2011 or something.
I think so, yeah.
Then I think there's nothing new to research. I think we're never going to know unless there's some kind of, inheritance event or something, perhaps. I mean, I don't know. It's all speculative at that point.
Adam is so awkward in these interviews, though. I do think that he might be sort of like Kevin Spacey and Unusual Suspects, and that he was playing us the whole time. But nonetheless, the FUD that we heard this week wasn't just about Satoshi. The FUD was that all of Satoshi's coins could be hacked by a quantum computing algorithm. There's this theory that there's massive pots out there of Bitcoin that are just sitting ducks for quantum computing. This is proposed from a guy who's clearly an expert on the TBPN network.
What about the rest of the digital world? Because if Bitcoin is having problems, then so many other kind of core institutions and companies, organizations, I imagine, would have issues as well. Maybe because they are centralized, there's easier to react, easier to kind of lock things down, but still need to upgrade overall encryption.
Yeah, there's no doubt that other institutions need to upgrade, but in my mind, there's also no doubt that blockchains and digital assets are just the most vulnerable. I mean, one reason is obvious. I mean, Satoshi's Bitcoin, so the founder of Bitcoin, who we think has gone away or died or something, they have a bunch of their early Bitcoin that hasn't moved. There's a bunch of lost coins. All in all, it's about to maybe 15% of all of Bitcoin supply is estimated to be lost. I mean, that's hundreds of billions of dollars potentially in market terms. So that's just a huge incentive that, like, let's take the counter example of, if someone wanted to hack into a bank or something. As you pointed out, banks are centralized, they can kind of react. Also, the cryptography, the way that banks implement this cryptography is just kind of one of many layers of security, right? So it's kind of, this breaks, like theoretically, if someone tried to wire all the money out of my account, my bank would call me.
Yeah, no, they literally have tape drives where, they have
Exactly.
cold storage, they print things out and they have the ledger and they can potentially roll back, which is crazy to think about. But like they could, if there was like a catastrophic hack, they could be like, look, everyone's just going back to yesterday's accounts and, that's better than the chaos that we were in.
That's it. And that's not true for Bitcoin, right?
Yeah.
All I need is one signature and all of Satoshi's or Coinbase's or Binance's Bitcoin is mine. There's no fallback. There's no anything. And that's how it was designed, right?
Yeah.
That's the point. That was the point. Permissionless finance. That's the challenge.
A couple of things. Satoshi's Bitcoin exists in a bunch of different wallets. There's institutional availability to Bitcoin that banks have that individuals have, like multisig. Nothing new here. And we also have new ideas coming out from people like Avihu Levy, which allows people to upgrade their Bitcoin wallets for just a few $100s without any soft forks at all. The massive news isn't about quantum and it isn't about Satoshi. It isn't about MMIW G2 LGTPQQIA+ not getting their funding. It's about there's a massive flood of capital coming into Bitcoin through products like MSBT or through Stretch, which pays you 11.5% dividends. The floodgates are about to open on Wall Street, and we're about to have a new Bitcoin Fed chair. That's the story. $10 trillion Morgan Stanley bought 444 Bitcoin on day one. Pay attention. There's not going to be any more Bitcoin left for you to buy. And that's why we not only give you opportunities to borrow against your Bitcoin, protect your Bitcoin, but also stack more Bitcoin, stacking through Bitcoin mining and a partner like SAS Mining. They'll help you set up the machines. They'll do all the maintenance. They send sats directly to your wallet. You don't have to think about anything. Use the QR code to get started with SAS Mining today. This is Dante Cook with Bitcoin Simply. Happy Friday and happy stacking.